This is a really big secret, and when I gave out the secret about a month ago, I used to have so many DMs saying, how dare you talk about this? I'm losing money out of my pocket.
So by having that education as a consumer, the lender is going to give you a better rate just to start with.
Exactly, because they're going to know that.
Hey guys! So
What's up, Noel?
today we are talking about the top secrets to getting a mortgage this year.
Nice.
Right now.
I want to
right?
know.
Love it.
Dmitry, what are those top secrets? Who are we with
Well,
today?
we're with Dmitry Kievsky, and he's with United Mortgage. He is the Senior Vice President of Operations and Sales, so he knows it all.
You must know a lot of secrets with that title.
I know a lot of secrets. I don't know about the title, but definitely a lot of secrets.
But let's just hop on into this. So, what is the smartest thing a person can do when they're going out to get a mortgage? What is the first thing they should be doing?
Great question. So we've all been kind of told, and we've all heard, go get pre-approved from the bank, and that's worked up until the year of 2020, where we just saw a big shift in the market. The biggest thing that people could do as home buyers in this market specifically is to skip out on the pre-qual, skip out on the pre-approval, and head directly for a full-blown mortgage commitment before they even step foot at any open house.
So right to the bank, give them all your information, get a commitment.
Absolutely.
And you can do that without picking out a property.
Well, that's what I was going to ask. Yeah.
So there's something called, and that's a great question. It's a TBD commitment, which stands for to be determined, since we don't have an address at this point. But what it does essentially is you're running up all the work up front. You're running desktop underwriting, which is the computerized underwriting model that a lot of buyers don't even know has to be run on every file before a live underwriter even sees the file. We're also ordering verification of employments. We're making sure essentially that all the work is done up front. Very similar, and I'm a big analogy guy for my home buying community, so I'll make the analogy. You wouldn't go to surgery without knowing what's wrong with you. And that's what a pre-approval is. You're essentially just going to the hospital for 9 o'clock's procedure, but not really knowing what the issue is. So what we're doing is we're having an underwriter that's both live and automated look at everything, so that way our clients can clear conditions and essentially do everything before they even find that perfect home.
Okay, so then once they get that commitment, that's like already recovering from surgery.
Yep, you already got
out
your
of
commitment.
surgery, so you're good to go. You're good to live.
good.
You're good to move forward.
But doesn't that have a time frame on it? And what if they don't find a house within that time frame?
Great question. So what we do is we make it valid for 120 days.
Okay.
By law, that's as long as credit's expiring for. So if after 120 days our clients haven't found that perfect home, then we go ahead and we extend it for another 120 days.
Okay.
But if they do find that perfect property, what they're doing, and this is a topic we just actually held last week on a private mastermind session, this is how we close the loan in 2 weeks. Once our clients enter contract, you're only needing 3 things: appraisal, title, insurance. You're done.
And you can do all that in advance, in theory.
Absolutely.
That's awesome. And now, what happens to that interest rate? So obviously, if you have an interest rate commitment or some kind of quote with an interest rate, will that stay for the 120-day period also?
So this is a big secret. A lot of lenders, they lose money by extending these rates and locking in for longer periods of time. A lot of lenders try to lock in 15 to 30 days. That's their sweet spot because that gives them the maximum compensation. Anything further out, at that point, the lender loses money. Because I'm not a lender per se anymore where I practice every day, I can give out these secrets. So you can extend up until 6 months. So you could lock in a rate and have that rate for 6 months.
So because you're
Wow.
locking in for 6
Okay.
months, is your rate a little bit higher?
No.
Okay.
Usually the price difference is actually less than an eighth, and most people don't even know that doesn't even go back to the borrower. So that charge
That's
doesn't
awesome.
carry
I
over.
didn't know that.
Well, you talk about the dangers of letting your lender dictate the rates. What does that mean? And why don't they dictate the rates? Who dictates it?
So this is a really big secret, and when I gave out the secret about a month ago, I used to have so many DMs saying, how dare you talk about this? I'm losing money out of my pocket.
I love
don't
it.
want buyers knowing about this. There's a term for all your viewers to go ahead and Google. It's called YSP, and it stands for Yield Spread Premium.
Yield spread premium.
Yup, and basically, in a nutshell, it's compensation that lenders get in exchange for giving a consumer a higher rate. So the higher the rate, the more money the lender makes. So right now, we've all been thinking that rates are 6, 7, 8%. I just gave a client on Friday with my partner a rate of 5.25 on a 30-year fixed with 0 points, because we're teaching people now how to choose their own rate and not let people like myself or any other lender tell you what rate you're getting, because how do you fact check that? What does the consumer do if they say, D, is this the lowest? All I have to say is, yeah, that's the lowest. it doesn't really give them any comfort to know that, oh my God, I could have got something better. But if I'm teaching people what to do, now they can go online, they can go through the systems that we used to lock, and they can essentially pick out their own interest rate to see what makes common sense for them and their financial budget.
But then that person who they're working with has to agree to give them that
Right.
rate.
Well, that's the biggest problem. A lot of loan officers right now coming out of COVID, we're in a very high rate market in the last year and a half. They are not doing any business. So many lenders who are not doing that kind of volume, they're never going to tell you how to do it. So they want to make sure that they make as much money as possible on that one transaction. So many lenders won't open it up. But if you're working with an honest person, they're 100% going to sit there and say, I'm opening up my books. Let me show you exactly what the rate spread is. You're going to dictate your own interest rate.
So now there's still money available to be made for that loan officer if they allow that buyer to have access to that rate spread?
Absolutely.
Okay.
Absolutely.
How do you find a lender that will do that?
Yeah.
Like, how do you, like, what do I just start calling people and saying I want the YSP rate? I mean, what do I do?
You know, believe it or not, what we do in our first-time home buying community on Facebook is we teach them the terminologies that we can actually use when going to lenders. So even if the lender wasn't so eager to open it up, the kind of terminology that our home buyers are trained to use, it's actually going to cause confusion on the lending world to say they're either being coached by somebody or they are very well versed in mortgages. I cannot pull the wool over their eyes. So a lot of times they'll be more open to go ahead and expose those.
So by having that education as a consumer, the lender is going to give you a better rate just to start with.
Exactly, because they're going to know that this person has a lot of information. I don't want to risk losing this client, so I'm not going to do what I normally do by giving a higher rate, because they're either going to shop me around or they're going to call me out saying, I want to choose my own interest rate.
So now when that happens, and if that lender says, okay, you can choose your own interest rate, don't they try to make it up with some kind of points or something else on the back end?
So we teach people how to choose what the par rate is. Par rate, for your viewers, is it doesn't give any money to the lender and it doesn't have any points that are involved with the consumer. So what I teach my home buying group is there's 3 kind of rates. There's a par rate that's free. There's a discounted rate where if they want to pay the points, they get a lower rate than the free rate. And if they need money at closing, how to choose a little higher rate, but now they can get money back for closing costs.
Wow.
So instead of going back to the lender's pocket for compensation, utilizing it for what they need to have the liquidity for closing on a mortgage.
So then when you're first meeting that lender, the lender should kind of do an interview with you.
Absolutely.
And ask you, what are your goals here with this house that you're trying to purchase, and what kind of monies you have. So should they be asking those specific questions? Do you have enough money to close in this property? Or do you want money back? Or the things that we just mentioned, should they be asking those questions?
Absolutely. And they should also kind of be gauging for liquidity purposes for money for a rainy day. For example, if I were to buy a home right now, maybe my financial circumstances allow me to have a little bit of a higher payment, even if it's by $80 or $100, not to obviously minimize that because that's money, but maybe it leaves me liquid for a rainy day. So maybe I don't need to spend $10,000 at closing by having a little bit of a higher rate. The problem is a lot of lenders don't offer those options. So if a consumer is well educated, they can now be able to gauge what works for them. Or they might say, no, D, I have money saved from a gift. This is something that my parents left me. I want to get the lowest payment, the lowest rate. I don't need to have any money left over. So at least they can choose what works for them.
I mean, I'm a big fan of keeping the cash in your pocket because it allows you to do more things.
Do
in
other
life.
things, right?
So I think that's great that these options exist to have more cash in your pocket. So are the lenders that do this, are they mostly the national lenders or the national brokers out there, or do some of the smaller shops do this stuff too?
So not to pat myself on the back, but I will.
Do it.
Thank you. I haven't found lenders that do it. 99% of lenders, they're doing this for reasoning of just compensation. They're not in there to educate. It's really a short-term play for them. For what I've built on my communities, it's been 4 years in the making.
And this is your Facebook communities is what?
So I have Facebook groups where we have a lot of first-time home buyers nationwide. They come onto these platforms, and this is where I break down the nitty-gritty.
What do I type in on Facebook?
First-time home buyers. That's it.
Okay.
They'll see me. I'm the number one. I'm the second largest group in size, number one by content. So all they have to do is just come in there. They'll get a sense of what we really do in that community, but we're getting them prepared from A to Z. So they learn every tip, strategy, technique, and everything they need in this market on how to navigate the right way to get the most advantageous outcome.
Now, what if I've already bought my home? I've already gone in for the high interest rate that I didn't know I could dictate, and I want to fix that. Tell me, how do I fix it?
That's a great question.
So that's an amazing question. So we're getting a lot of people, because now when they close in my groups, they also go to my home owner communities. So a lot of people are depending on me to tell them where the rates are. I've always said it, if it's just to lower the rate, it should make financial sense. The golden rule, 1% lower than what people have. Of course, the biggest thing that I'm hearing is, D, where do you think rates are going to be? Are they coming down?
Where's your magic ball, right?
Where is it? I'm not going to lie. I don't think that there's ever going to be a time that we're going to see 2020 rates again.
Okay.
It happened one time in history. If I remove 1 year from all of existence, the lowest we've been at is in the 4% range. We're in the 5s now. So we're very close to historic lows. But the problem is what we saw in the last year and a half was 7-8%. And nobody in the media is talking about that rates are in the 5%.
Well, that's because I think most lenders are not giving the rates in the
Correct.
5%.
I think you're
still
right.
giving them in the 6%.
Correct. Because they're making money in compensation.
yeah.
So why tell people that rates are in the 5s if they're still agreeing to something in the 6 or 7s?
Well, what do I Google? I mean, do I go on and say, when I Google what is today's interest rate, does
You're-
that have anything to do with anything?
Nope, it's going to scare you. It's actually going to be higher than anything.
Oh.
I think the average rate right now is 7.125 on Google. And I'm not God's
Okay.
gift of mortgages, so how am I getting rates in the low to mid 5s? It's
Right.
because it's the real rate. Banks are out there, not 99%, 100% to make money. So if they can sit there and collect a lot more interest over 30 years,
Sure, they're gonna do it.
They're going to do it. They're not going to have any motivation to give you the lower rate so they can lose money.
So now how do you get that low rate and not pay points?
So what it's called is just a rate sheet, and this is what we teach our home buying communities all about. How to go look at an investor's rate sheet and really look at the lowest par rate. So now they can sit there and go through a multiple amount of investors to see which investor is going to give them that low rate. So it might not be Flagstar, it might be US Bank. It might not be Chase, it might be Citibank. But at least this way they can look around on the rate sheets and not take a lender's word for it. Just literally look at it on a piece of paper and say, this is the lowest rate, this is the option I want to go with.
All right, so we had how many secrets so far? We had 2.
We had 2 secrets.
We had the first secret was get the commitment.
Right, you want to
Not
get
the
the
commitment.
full
Yeah, the full
commitment. You
commitment.
want to get
Full-blown
the
commitment.
full
Full-blown
loan. You're
commitment.
just going with it. Now, what if
Then-
you don't use all the money for that? Or you need more money than what they gave you? Because you haven't found your house.
Correct. So what you could do, and this is a huge thing, I do this, it's a little bit more work as a lender, but I do it. So I just had a client over the weekend. He goes, D, I'm finding houses that are between 380 and 400. I'm pre-approved or approved with you for 500. I don't want to show all my cards.
Sure.
How am I going to negotiate with the $300,000 home if you have a $500,000 approval?
Good
What I
question.
do is I always tell people, get a couple of different amounts that are closer to the home prices in your area.
Okay.
No one's going to negotiate on a 380 house something that is approved for 500. They know you could afford 120,000
Yeah,
more.
yeah.
So I try to make a couple different numbers, maybe 380, 400, 415. This way the home buyer knows which one to give to the seller, what offer to provide. So it's almost like a little reverse psychology.
I love this. So basically, you're teaching people how to win that contract, how to get that seller to choose you as a buyer because of A, getting the pre-commitment, which
Yep.
is gold compared to the pre-approval and the pre-application, and then B, you're giving them the tools to spend more money on their house because you're getting them the
Yep.
ability to have a lower interest rate, so that money can go towards the house.
You're a mortgage
Exactly.
hacker.
It's a little bit of like, those
It's a
TikTok
mortgage
hacks that
hack,
you see, but these are real.
as my kids would
Yeah.
say.
Yes.
You're hacking it.
Yes. And it really does help separate other people. Think about the average house. It might have 10, 15 people looking at it. If every person's got a pre-approval and you're the only buyer with a full-blown commitment and the Fannie Mae desktop approval, that's 2 different things that you're
Yes,
showing a seller that
100%.
no one
Yeah.
else has. Your chance of getting that accepted offer is that much higher.
That's almost like
Brilliant.
that's almost like cash.
That's
Brilliant.
exactly right. You hit the nail on the head. It's literally closing in 2 weeks, and we can write that stipulation. You're ready to close in 2 weeks, provided you have title, appraisal, insurance.
So I know you don't have the crystal ball, but where do you see the housing market going this year?
I think that the values are going to continue to go up. I think interest rates are going to come down a little bit, but to a level of maybe 4 to 5%. I don't think we're going to see anything lower.
Which is respectable.
I like to be pleasantly surprised. I'm a homeowner.
Okay.
I'm an investor. I'm an admin. I'm a lender. So
Hold
for
on,
me,
the big question: what's your interest rate on your home?
so this is the thing. I thought I was the man. So I have a 3.5% fixed, but there's always a but. I have a $500 a month mortgage insurance that I pay. So my rate really is 7%.
Okay.
Everyone just goes, oh, D has a 3.5. But what about my payment?
Yeah, but that'll go away eventually.
That will go away hopefully soon. But it's 3.5. I did get it at a time when rates were probably like around 3.84. So I got a little of a discount. But right when I closed that next week, rates went to 2.9. I was
Ooh.
miserable.
So let's just
Miserable.
explain why you have a $500 mortgage payment. That's because you didn't put 20% down, right?
So I did a refinance. I bought my home in 2010. In 2021, I refinanced. refinanced. I got myself into a 3.5, but I went FHA. The reason being is I took a lot of cash out. FHA allows you to take more cash than a conventional mortgage. So they limit you on how much money
So
you can
that's what
take.
the insurance is for.
That's the monthly mortgage insurance, which
All
is the
FHAs
MIP.
have insurance.
Every
right?
single loan
Doesn't
with
matter.
FHA.
Now, doesn't the insurance go away once you reach a certain
Right.
percentage of equity in the house?
With FHA, interestingly enough, it just changed. If you're putting less than 10% down, it stays on for the life of the loan.
Wow.
You can never get it removed unless you refinance. Conventional, a lot of people think it's 80%, only with an appraisal. It's
Okay.
automatically removed once you reach 78%.
Okay.
So at the end of the day, it's only 2% difference from 80 to
So
78.
that's an added reason not to put 10% down.
Exactly.
Okay. Good
Exactly.
to know. That's a new thing.
Any other tips, secrets that are going to help home buyers in this market that's going to push them to the top of the line?
I got one really good secret. For a lot of people, finding a home is a very big struggle. Go find that house that has no curb appeal. The aesthetics just completely suck. Everything about the property, you really just want to run the other way. Why? There's something called a renovation mortgage that nobody really utilizes and no one talks about. With a 3.5% down payment, you can come as close to as possible to a custom built home. So let's say you find that perfect property for $300,000. Every other house is going for $400,000. It's only this cheap because the inside condition or the
Sure.
exterior. I could utilize the low down payment, get myself into a renovation mortgage, and literally remodel this house the way I want to. And what the banks are now going to use is what's called the aftermarket value. So based on comps of the work being done, this house could essentially be worth a lot more than 4, but you're also walking into almost a new build home.
Yeah.
So this is a huge opportunity to separate yourself from other people
Are you
because no one's
talking
buying
about
that home.
Are you talking about the 203K?
The 203K, but specifically the conventional renovation loan,
Conventional
that allows you
renovation.
to do anything you want. Maybe you want to blow out that backyard, add a pool, add luxury items. 203K doesn't let you do that. Conventional, it does not limit you on what you could do as far as the exterior. So that's a huge opportunity.
We always talk about value add properties. So that's right up the alley with a value add property. And I think that's the way to go, especially for first time home buyers. You're getting better access to a property because you have less people that are willing to do the work.
Right.
And then you're getting the ability to make it your own. And who wouldn't want their own? You know, having your own toilet and being that first person to sit on it, what an amazing opportunity.
That is true. That's a good point.
Does your company offer that loan?
Yeah, so we're a servicer too. We service our loans, so we have every product under the sun, including
Okay.
down payment assistance, renovation loans, construction loans. But I've really been kind of honing in on this renovation loan because a lot of buyers, it's a lack of education on the real estate professionals where they don't know as a home buyer that you can have money to incorporate it with repairs. Some people just think, oh, it needs 50 grand of work. I don't have the money. I'm just going to keep scrolling by. When in reality, they might be able to have that loan,
Sure.
incorporate it, and that could really be the answer to everything else.
So I might be showing my hand here, but what if you already bought your home and you want to get a construction loan to refinance into? Can you do that?
Absolutely. It's amazing. As of last week, fun
I have a
fact.
ton of work I want done.
No, this is huge. You could actually now, and this is a big struggle. A lot of people, of course, qualifying is a big problem. You can now, and Fannie Mae allows it, it's called accessory dwelling unit, where if on a single family home, if you have a separate entrance and it's set up like an apartment, you could use projected rental income. So if you
have
don't
to do
have it,
Hey, I'm not putting anyone in my home.
no,
It's
some
okay.
people don't, they're like, listen, I don't want it. But for that right
You
buyer,
have that shed in the backyard.
you can make
Go
that,
for
right?
hazard.
Turn that in, put that into, give one of the kids that.
But it's a great opportunity also to be able to renovate the property,
Okay.
not have to come out of pocket. So yes, if you're a homeowner and you wanted to renovate the property, maybe time has passed, the roof is about to go,
Sure.
there's certain appliances that just come time to fix, you can go ahead, utilize the same mortgage to be able to renovate it. And chances are the rate is probably going to be lower financing it into your mortgage than taking out a 20% interest rate on a credit card.
Sounds
So,
great.
One more big question. The rates change based on the amount of money you borrow. So what are there any limitations to you're talking about how the rates are in the low fives now? Does that stop at $800,000 for a jumbo? Where is it today?
Great question. So for the majority of the people that I work with, and we're all spread out geographic locations in different areas. So for jumbo loans, they typically are about 1/4 to 0.5% higher.
Okay.
But for the most part, most of the people that we're dealing with in most of the states, they're going to be under that threshold of jumbo. So whether it's high balance or what's called the conforming mortgage, they're going to be seeing interest rates in that range that we talked about, which is in the low 5%.
Wow.
So if anyone has not already subscribed liked. They have to like it because you're here with us. So
They have to. No one's giving the information that has on this
Those
kind
secrets.
of podcast.
Yes.
This is the secrets that you
Mortgage
need.
secrets.
And
Yes.
the great thing is if you leave a comment with us, Dmitry is excellent at responding with video responses. So
Nothing's
I
typed
love
out.
that. I love that. So you
Awesome.
can get your own personal like video from
It's on-
Dmitry.
You know what I said it, and I've said the same example. I have basically a community where Dr. Fauci's on demand to answer any of your medical questions
love it.
all day, every day. So that's exactly what we want to provide to your viewers: an opportunity to get on-demand help.
Dr.
That's
Dimitri,
wonderful. Dr. Dimitri.
the mortgage doctor.
Well,
There you
thank
go.
you guys. Thanks for watching this episode. Now, don't forget to like, subscribe, and leave a comment. And we'll see you next time.